All right, let's dive right into this explainer. Today we're talking about a massive shift in global entertainment. We're looking at how to take authentic African storytelling, specifically incredible films featuring rich, complex Black characters, and transform it all into a highly profitable, structured asset class. We're moving way past the informal, hustle-based movie making of the past and looking at building a professional investment fund dedicated entirely to African cinema and digital content. We've got a bit of ground to cover, but I promise to keep it simple. We're going to hit the African storytelling gap, look at the investment fund solution, break down the legal and capital entities, explore revenue streams and IP value, touch on the risks and scalability, and wrap up with the ultimate exit strategy. Let's get into it.
Section 1. The African Storytelling Gap.
So, look at this glaring paradox. There is a massive, booming, global demand to see authentic Black characters and African stories on screen. Yet the way these films are funded is, quite frankly, stuck in the past. Think about it. Nollywood produces thousands of films a year, but producers are literally still passing the hat around. While mature markets like the US or India rely on structured institutional financing, amazing African creators are out there heavily relying on personal savings, family favors, or tiny grants. The on-screen talent is absolutely phenomenal, and the production costs are a fraction of Hollywood's, but that underlying capital infrastructure, it's just totally underdeveloped. So it's not just a lack of cash, right? Filmmakers are missing the whole foundational infrastructure required to protect their rights. Beyond just needing capital, we're dealing with weak distribution financing, meaning these beautifully shot films featuring phenomenal Black talent are made, but they never actually reach paying eyes. Then you've got poor IP ownership structures. Creators are forced to sell their stories way too early, completely losing out on the long-term wealth these characters generate. And lastly, there's zero institutional capital market for film here, unlike what you'd see in real estate. Moving right along to Section 2, the investment fund solution. So how does a dedicated fund actually fix this? The flow of capital is honestly beautifully simple. Step 1, institutional investors, think family offices or diaspora members, provide the capital. Step 2, a professional fund takes that money and finances a whole portfolio of projects. Step 3, those films hit cinemas, streaming platforms, you name it, and generate real revenue. And finally, Step 4, everybody shares in the returns. Institutional money goes in, it funds incredible art, the art makes money, and everyone wins. And look, we're not just throwing money at random indie movies here. We are talking about building a true, lasting institution. With a global explosion in streaming, high-quality content is a structurally sound investment. The vision here is to build an African media powerhouse that captures that global demand, develops the talent behind these vibrant Black characters, owns the intellectual property, and turns storytelling into a long-term wealth-generating machine. Which brings us to Section 3, structuring legal and capital entities. To build an institution like that, you need rock-solid framing. You can't just wire money to a bank account and start yelling action. You need an SPV, or a special purpose vehicle. Think of this as your financial shield. Film is inherently risky, right? Some projects are just going to flop. So by creating a completely independent legal entity, an SPV, for every single major production, you isolate that risk. It's like watertight compartments on a submarine. If one film goes wildly over budget, it doesn't drag down the rest of the projects or sink the main fund. To get even more specific, here is the recommended 5-entity structure to keep everything absolutely ironclad. Up at the top, you've got a holding company protecting the long-term equity. Underneath that sits the fund management company making the actual investment calls and the film fund vehicle where the capital actually lives. Then you have those project SPVs we just mentioned and, crucially, a dedicated IP holding company that exists solely to hold the rights to the stories and characters. Now this is where it gets really interesting. Operationally, this entire setup is asset-light. Your capital is going directly into productions, not getting tied up in owning giant sound stages or expensive camera gear. But economically, it is heavily asset-rich because it's IP-heavy. The true compounding value of this entire venture sits entirely in owning the rights to those films. All right, Section 4, revenue streams and IP value. So where does the cash actually come from once the film wraps? As you can see, a successful release doesn't just make a quick buck at the local cinema. It creates a massive, diversified revenue engine. The box office is literally just the starting line. After that, you've got streaming licensing, which is a massive growth area right now, followed by broadcast TV rights, international distribution, and eventually merchandising and adaptation rights. Over time, you're transitioning from a one-off ticket sale to a really robust recurring revenue model. And this quote right here hits the nail on the head. IP ownership often generates more value than initial box office revenue. That is the golden rule of film financing, folks. Owning the franchise rights, controlling the sequels, licensing those iconic black characters for games or merchandise, that is exactly where generational wealth is built. It completely dwarfs whatever you make on opening weekend. Let's pivot to Section 5, Risks and Global Scalability. Now, I'd be lying if I said this was totally without hurdles. We have to be realistic about the facts on the ground. The scalability across high-potential markets like Nigeria, South Africa, and Kenya is absolutely staggering. But you're going to face major structural barriers. We're talking about piracy, incredibly fragmented distribution, and in some regions like Ghana or Rwanda, weak legal enforcement and limited production insurance. But that is exactly why this professional fund structure is required. It is specifically designed to navigate those exact roadblocks. You've also got to keep a close eye on operational risks. Proper treasury management is absolutely crucial here. You'll run into legal risks like copyright disputes or regulatory hurdles regarding local content restrictions. But the big one? Currency risk. Think about it. Your films might be earning big global revenues in US dollars or euros, but you're paying your crew and production costs in local currencies. Managing those exchange rates effectively is going to make or break the fund's operational success.
Which brings us to our final part, Section 6, the ultimate exit strategy.
Okay, so you put your money in, you fund this amazing art. You build up a library of valuable characters and stories. How do you cash out? Because you're building a massive IP library, the exit opportunities are fantastic. We're talking about a highly lucrative buyout from a global streaming giant, or a private equity firm snapping up the content library once the cash flows are predictable. While an IPO is always a long-term possibility, a lot of investors might honestly just hold on for decades of steady dividend payouts from ongoing licensing. And to make all this completely palatable for international and high net worth investors, you use a strategic cross-border structure. It's brilliant, really. You place the holding company in a tax-efficient jurisdiction like Mauritius, while your fund manager is right there on the ground in Nigeria managing those country-specific SPVs. So investors get the security of international compliance, but the operations stay fiercely and authentically local. It really comes down to this. Content is becoming a long-term global asset class. This isn't just about entertainment anymore. High-quality African storytelling, showcasing authentic Black characters to a global audience, is structurally sound, highly scalable, and fundamentally evolving into a premium global asset. It's a true once-in-a-generation investment opportunity. So, the infrastructure is finally being built. The global demand is incredibly hungry, and the talent is more than ready. The only question left is, will you just be part of the audience, or will you step up and be part of the institution? I really want to leave you with that provocative thought. If this explainer sparked your interest and you want to actually help build this historic asset class, don't wait around. Reach out and get involved today. Thanks for hanging out with me, and I'll catch you in the next explainer.